Guest today, folks, a dynamic guest, and his name's Tom Joseph. He's the creator of Advanced Get software. Now, Advanced Get, depending on how long you've been around, folks, okay, bottom line, this was selected the #1 trading system for 12 straight years, in the futures market for 11 years, in the equities market by Stocks and Commodities magazine. Tom then sold this to eSignal. If you happen to be an eSignal user, you get to use this software on a continual basis. And he started in 2004 Dynamic Trend, okay? Dynamic Trend, what Dynamic Trend is all about, folks, is what? It's a comprehensive option analysis platform powered by eSignal. Now, coming this Saturday morning, okay, and this is free, folks. You can go to eSignal.com right now. And what you're going to see on the very front page of eSignal, go under Education, and what you're going to see is Back in Black. And coming this Saturday morning from 9 o'clock to 1 in the afternoon, there's dynamic speakers. And when we're talking about the eSignal platform, when we're talking about Dynamic Trend, Tom's associate, Ron Wheeler, is going to be doing a workshop from 11 to 11:30, and we're going to be talking about creating high-probability option spreads using options. Tom Joseph, welcome to TFNN.
Thank you.
So, Tom, let me ask you, what is Ron going to be teaching the eSignal clients this Saturday morning?
Ron is right here with me. Ron, you want to step in?
I will. Hi, this is Ron Wheeler, and as you mentioned, I'll be the one teaching this Saturday. I'm going to be using a combination, really, of Tom's greatest hits, the advanced get strategies to find high-probability Elliott wave trading.
Yes.
And then I'll be combining that with some of the new options things we've come up with here at Option Dynamics for creating spreads to really increase the chance of success on the trades.
And, you know, when we're talking spreads, are we talking spreads now in the equity market, the future market? What type of spreads? And, of course, you're talking bull and bear spreads, right?
Correct. We're going to focus on the equity markets. We'll be putting together bull put spreads, bear call spreads. I like to do the spreads in conjunction with what the current market is doing. So right now we're bullish. I'll probably be constructing more bullish spreads than the bearish at this point.
Yeah. And, Tom, when you basically put together Advanced Get, what was the passion behind it? And you know, I know the program is dynamite, and you know, there's plenty of computers now, but when you put this together, the computer age is really just starting in computers, not you know, in trading, let's say.
Yes, you're absolutely right. But when I first started trading, I had CQG, and for trend lines, I used a string with 2 pieces of bubble gum on each side of my chart. From there, we created an Advanced Get. That was a long time ago. It focused on Elliott wave analysis. Elliott wave was a very prominent analysis at that time.
Yes.
But it was very hard to for a normal trader to understand and utilize in real time. And we computerized that and made that available in our Advanced Get program.
That's interesting, too, because it seems that the Elliott wave, when, like anything else, when it really goes, it goes well, but it seems like there was a good amount of backing into an Elliott wave curve. Well, let's put it this way. Different people did different things with it, right?
Yes, sir. We just focused on the one portion that was very clearly identifiable. And so the rest of it, we just left it alone and only focused on stocks or futures that had the wave 3, wave 4 situation. And that was very easily identifiable.
Oh, isn't that cool? Ron, so when you're teaching this coming Saturday, and what Ron's going to be on, folks, okay, from 11 to 11:30, and you know, the option market in general has changed so dramatically over the last 15 years. You know, you have penny-wide pricing right now inside the option market. Does that make your spreads easier to put on, Ron?
Yeah, very much. It's easier to find good pairings. You know, the bid and ask being closer together makes the reward risk a lot more advantageous. It's a much better marketplace. You
know, as I'm going through Dynamic Trend, you know, there's no doubt the inside the option market, it's all about decay, right? Can you talk a little bit about decay and what that means to an option trader?
Yes, the decay can work in 2 different ways. One, if you're just outright buying the call, you got to be careful about the decay because every day so much of the value decays out. But at the same time, if you're selling a credit spread or if you're selling a covered call, that decay can work in your favor as well. So it's a two-edged sword.
Yeah. And are there any types of, if we're talking futures or we're talking equities, are you prejudiced to any type of vehicle there?
You talk about in relation to options?
Exactly. Do you like trading the Qs? Do you find spreads are better in the Qs, better in the actual, what's American Express or an equity, and or the futures?
Yeah, definitely a lot more volatility
in the Qs.
In the Qs.
Okay, right, yeah. Because it's amazing watching the transformation the last 15 years in the markets. And you know what I've found? It's interesting. It seems like the dynamic changes at certain points. Whether I see you have a sector tool on here also. And it's like the XLE right now. It's amazing. Everyone's talking about the volatility inside the energy. The XLE, that's down 20%. So it's pretty amazing, watching how a sector can basically fall apart.
Exactly. The sector plays a big difference. If you trade in the direction of the sector, you have a more profitable situation. So we follow all the sectors and the groups and identify the strong ones or the weak ones. And if you're buying, you would just go into the strong sectors or groups. If you're short or selling, you would go into the weaker ones. So by using that, it kind of moves you in the right direction dynamically.
Yeah, and I'm looking at between the advanced option chains, the option decay tool, the spread select. The spread select, is that giving you the best risk for reward ratio?
Well, it's showing all of the individual spreads that you can create with it. It does it by credit, does it by risk, so it does put those in order, yes. And we're going to be using that in our presentation on Saturday.
Nice. And folks, the way that you sign up, you come over to eSignal.com, and when you're on the front page of eSignal, what you do is you're going to hit education. As you hit education, what you're going to see is it's going to come up and say it's going to be back in black. You can sign up right here, right now, absolutely free. You can take a look at some of these workshops. Number one, the software that is involved is pretty incredible. So when you're basically putting either sectors, Qs, SPYs into the eSignal platform using the dynamic trend, is it giving you the most probable trades that are coming up? Or what exactly does the dynamic trend do?
Well, it's two parts. Yes, the answer to the question overall is yes. It's going to give you the most probable ones. What we're going to do, and this kind of gets into what we're going to talk about Saturday, I'm going to start with the advanced get scanner to find the underlying Elliott pattern that Tom mentioned.
Okay.
That's profitable 3, 4, 5.
Yes.
And then what we're going to do is we're going to take those results and we're going to put it into the options analytics to find, first of all, we're going to talk about the volatility.
Yes.
Because, it's a good stock trade. The stock's going to go up or going to go down based on the pattern, but now we got to put it in the right options. Are we going to do just buying calls, or are we going to do a bull put spread? We got to figure out if it's got low volatility, high volatility, and we're going to take it from there from the option side.
That's pretty cool, man. That's hey, Tom, when you're looking at your system right now, between the advanced get, then you put your second system in, which Ron was just explaining, it's a great accomplishment in the course of 15 years. What's going to be next?
Well, I guess auto trading, where you just start it in the morning and let it trade by itself.
Yeah, it's interesting what has happened. What's so cool? There is no doubt that the options, I know you guys have been around forever in the option market, and folks, years ago in the option market, okay, the disclosures in the option market are unbelievable, okay? And I was always saying, man, it's amazing that the equity market never had that. The equity guys get away with murder, right? You know what I mean? It's on a continual basis. Oh, you buy, JDSU at $200 and it goes to $3, but yet the option market, do you remember? Or the continual basis, options, you lose money. It's like, hold it. Options are defined risk. Now, that has changed even in the perspective of the public relations in the last 10 years, hasn't it?
It sure has. And you're getting a lot of interest, though. I mean, a lot of traders are coming in especially the new traders are attracted to the option side.
Yeah, well, it totally makes sense when you can trade the Qs for basically dollars at the money options versus $100. You can see that dynamic, and of course, the defined risk is absolutely huge. Well, listen, Tom, Ron, thank you so much. We look forward to hearing you, Ron, Saturday morning.
Thank you.
Okay, have a great one. Have a safe one.
You too. Thank you.
Thank you.